Hello everyone, let's start our today's discussion. I hope you all remember that in our previous two classes, we covered question number 1 and question number 2 of this official mock exam issued by ACCA for June 2026 exam attempt for our advanced taxation exam. In our today's class, we will be moving forward and we will be looking at question number 3. These complete past paper discussion sessions are really important for your exam preparation in these final few days. It's really important that you look at complete exam papers so that you can understand that how actually you have to deal with all of the topics together in the examination in time restricted situation. I have told in the previous classes also that in this series of past paper discussion sessions, we are looking at 7 complete attempt exam papers which I am discussing with you guys. And then I will be giving you 3 mock exams to attempt on your own and send me for checking and feedback. Along with the discussion of this question, we will also be referring these life-saving summary notes in which I have summarized the entire course of advanced taxation in just 57 pages. We have used these documents in the previous classes also when we were referring the first 2 questions of this exam paper. So now let's look at question number 3. We will be first reading the entire question, including the introduction and the exhibit, and then we will discuss each of the requirement in detail, including the drafting of complete answer during the class discussion. So let's deep dive into it. I want you all to listen to me with patience and concentration because that will help you understand this question in a better manner. Now, you should assume that today's date is 1st September 2026. Tariq requires advice on the following. The loss relief available on the cessation of his trade. Now see, this is the introduction of the question where the examiner is introducing that what topics will be asked in this scenario. Okay, so when you are reading it, don't rush. Try to read the information carefully. Maximum possible information need to be identified, which will help you when we'll be looking at the requirements. Second requirement is in relation to the value-added tax treatment of overseas transactions in his final period of account. Then VAT position following the cessation of his business and income tax implications of relocation payment. So apparently, if I look at this question, it's in relation to some individual loss reliefs because it relates to this individual Tariq. Then there are some VAT issues, and then there is issue in relation to relocation payments. The following exhibits available on the left-hand side of the screen provides information relevant to the question. That's exhibit number 1, which is in relation to Tariq. And the information should be used to answer the question requirements within your chosen response options, which are this word processor and a spreadsheet document, which we'll obviously be looking when we'll be actually drafting the answer. So let's look at this exhibit, which is exhibit number 1, Tariq. Now, Tariq ceased to trade on 31st of December 2025 and sold the assets used in his unincorporated business. So it is a situation of individuals because it's not a company, it's an individual Tariq who closed his business on 31st December 2025. Since the introduction referred some loss relief things, so maybe there will be terminal loss relief involved in it. Sold his house, Coral Cottage, on 1st March 2026 for £125,000 more than he paid for it. So I can say that on the disposal of the house, there was a capital gain of £125,000. Began working for Verve Limited on 1st May 2026, became an employee, has no chargeable income or gains other than the amounts referred to the information below. Tariq's unincorporated business. The sale of business assets resulted in a net chargeable gain of £74,000. So there is one capital gain on this disposal of business of £74,000 and another capital gain was on disposal of a house, Coral Cottage, and that gain was of £125,000. Tax adjusted profits and losses of the business have been year ended 31st March 2022, there was a profit of 50,100. Then in 2023, it was 70,000. Then in 31st March 24, it was 62,000. Year ended 2025, it was 24,950. And then 9 months ending 31st of December 2025, there was a loss of 27,000 pounds. So we are reading the information. We are not rushing towards any conclusion or answer. Just analyze the information in a good manner, and believe me, when you will be attempting the answer, it will be very easy. But for any question, reading and analysis of the data is the most important thing. Now, the majority of the business assets were sold to unrelated purchasers during December 25 and January 2026. Tariq retained some of his business assets for his own use. Okay, fair enough. Imports from Afghanistan. In the 9 months ending 31st December 2025, Tariq imported some goods from the country of Afghanistan. Okay, fair enough. Remuneration from Verve Limited. Tariq is being paid a gross salary of £58,000 per year. On 1st July 2026, Verve Limited paid Tariq a relocation payment of 34,500. If you remember, relocation concept is taught in exempt benefits in employment income. Relocation payments given by the employer to the employee is an exempt benefit up to 8,000 pounds. Any excess amount paid is chargeable. Fair enough. He is being paid 34,500. Now, what is included in this 34,500? Tariq sold Coral Cottage. Coral Cottage was the house he was living in. If you remember, he sold his house. Okay. Tariq sold Coral Cottage and purchased a new home in order to live near the premises of Verve Limited. 21,000 pounds of the relocation payment is to compensate Tariq for having to sell his house at a short notice and at a low price. See, here you need to understand that this 21,000 pounds is an other way settlement given by the employer to Tariq, to the employee. That's completely chargeable. There is no exempt benefit for this. Like, okay, you sold your house for a cheaper price. It has nothing to do with the tax department. This 21,000 pounds is like a normal employment benefit, or I would say a normal bonus which is given to you. If you sold your house cheaper, tax department don't give any exempt benefit for this. There is no exempt benefit for selling your house at a cheaper price. So if his employer paid him 21,000 pounds for it, it's a normal chargeable amount. There will be normal income tax and NIC on it. 13,500 of the relocation payment is in respect of the cost incurred by Tariq in relation to moving the house. Yes, from this 13,500 pounds, 8,000 pounds is an exempt benefit. This 21,000 is completely chargeable. It's a complete employment benefit. See, the employer paid you 34,500. Why? Because you sold your existing house cheaper. So in order to compensate that, he gave you 21,000 pounds. That's a normal chargeable amount. There will be normal income tax and NIC on it. The remaining 13,500 pounds which he paid for your cost to relocate from this 8,000 pounds is an exempt benefit. And then there is nothing else in the question. Now let's look at each of the requirement that what the examiner is asking from us. Now, you should assume that today's date is 1st September 2026. Part A1. Calculate the trading loss for the tax year 2025-26 and the terminal loss on the cessation of unincorporated business. How many marks? 3 marks. We just need to calculate the loss amount. Let's see. We will look into it. We will analyze it in much detail. Let's just start framing the question. The question name is Tariq, and this is my first requirement. I've just copied and pasted it. We are looking at part A1. This is question name. Here we go. Okay. Now, let's see what he's asking from us. Now, He wants you to calculate the trading loss for the tax year 25-26 and terminal loss on the cessation of Tariq's unincorporated business. Now, if you go and look at it, see, in the year ended 31st March 25, which is tax year 24-25, there was a profit. Then the last period is a 9 months ending period, 31st December 2025, in which there is a loss. See, the question is for which year? 25-26. So 25-26 is this period. See, always remember that how do we identify the tax period? You look at the end date. The end date is 31st of December 2025 and it lies in the tax year 25-26. Tax year 25-26 started on 6th of April 2025 and ends on 5th of April 2026. In the examination, to keep the things easy, we consider it as 1st April to 31st of March. So now the first question is, calculate the trading loss for the tax year 2025-26. This is the first question. So trading loss for tax year trading loss for tax year 2025-26 will be of how much? Will be 27,000 pounds. Will be 27,000 pounds. Let me copy the pound sign. These are small things. If you take care of them, it's good. But if you miss out, there is no issue. Will be 27,000 pounds. Okay. Trading loss for 9 months ended 31st December 2025 will be assessed in tax year 2025-26 and it is of 27,000 pounds. I think an easy one, a brief statement. Okay. In 2025-26, we will be assessing this 9 months period, which is 31st December 2025. And there is a loss of 27,000 pounds. The second question is, we have to talk about terminal loss. Now, what is terminal loss? Terminal loss is a loss of last 12 months of a business. In case of Tariq, terminal loss amount will be, how much will be the terminal loss? If you look at it, loss in last accounting period of business. Now, what is the last accounting period of business? 9 months ended 31st December 2025. That is 27,000 pounds. Now, since terminal loss has to be for 12 months, so we need to borrow loss from the previous accounting period also. Because here last accounting period was only of 9 months. Loss to be borrowed from previous accounting period. You can say previous accounting period or you can also say second last accounting period. Okay. Previous is also good. From second last accounting period. How much? Terminal loss is of 12 months less 9 months assessed in last accounting period. Months to be borrowed from previous accounting period will be 3 months. See, terminal loss is of 12 months. In the last accounting period, there were 9 months. There was a loss of 27,000 pounds. How many months we have to borrow from the second last accounting period? We have to borrow 3 months. But now if you look at their second last accounting period, there was a profit. And that profit was of 24,950. Always remember that if there is a loss, then you will borrow. But if there is a profit, then you will not borrow. Okay. In second last accounting period, there was a profit of 24,950 pounds. As there was a profit, therefore, it will not be borrowed. Okay. Terminal loss will be 27,000 pounds. I have explained it a bit more. In the examination, you can reduce the explanation also if you don't have time. Like, if you look at it, I repeat the things also particularly so that you guys can understand in a better manner, because obviously I'm teaching also. But in the examination, it was a 3 marks requirement, so you can be a bit straightforward also. Trading loss for tax year 25-26 will be £27,000. Okay. Trading loss for 9 months ended 31st December 25 will be assessed in the tax year 25-26 and rates of 27,000. Okay. Now, terminal loss is the loss of last 12 months of the business. In case of Tariq, what will be the terminal loss? Last accounting period of the business, 9 months ended 31st December 25, there was a loss of £27,000. There was a loss of £27,000. Loss to be borrowed from second last accounting period. Terminal loss is of 12 months, less 9 months assessed in last accounting period. Months to be borrowed from previous accounting period, or what we call as second last accounting period, will be 3 months. Okay. Now in second last accounting period, as there was a profit, so obviously you cannot borrow the profit. If there will be a loss, you would have borrowed. If you borrow the profit from the second last accounting period, your terminal loss will decline. So obviously no one will do that. So the terminal loss value will remain at £27,000. Okay. All of these things you have already studied in your course. You can also refer the summary notes at any point wherever you want. Now comes the second requirement. Explain the reliefs available in respect of the losses calculated in part A1 and quantify the potential tax saving for each of them. See, basically, the loss of 25-26 is in reality a terminal loss. But in individuals, you have an option. You can either treat that loss as a normal loss. If you treat it as a normal loss, then what will be the options? Offset current year total income and previous 12 months total income. And then you can also offset the capital gains also. In individuals, this is an option. But if you treat this loss as a terminal loss, then it will not offset the total income. Terminal loss only offsets the trading income of current year and last 36 months. See, this trading loss of 25-26, which is the last accounting period, this can either be treated as a normal loss of 27,000 or it can be treated as a terminal loss. If it is treated as a normal loss, current year total income and then last 12 months total income. Along with that, you can also offset the capital gains. But if you treat it as a terminal loss, it will only offset trading income of current year and then last 36 months. There is a difference between total income, capital gains and trading income. Okay. If you don't remember the rules, just go to the summary notes, write terminal loss. Okay. But make sure there is a terminal loss concept in companies and then there is a terminal loss concept in individuals also. Okay, so you don't mix it. Okay, now this is terminal loss in the head of individuals. If there is a terminal loss in the last 12 months of the business, you can offset against trading income of current year and then last 36 months trading income. Terminal loss can also be relieved as a normal loss. In that case, carryback claim will only be of 12 months. However, offset can be done against the capital gains in this option. So this loss of £27,000, you can treat it as a normal loss or you can treat it as a terminal loss. Let's look at it. Okay. Trading loss in tax year 2025-26 can be relieved as a normal trading loss by Tariq. In this case, it can offset against total income of current year, which is 25-26, and total income of previous year, which will be 24-25. Further, it can also offset capital gains of these periods. So we can treat it as a normal trading loss. Another option is that we can treat it as a terminal trading loss, because this 25-26 is the last period of the business. This is the last period of the business. We ourselves said it that it can be converted into terminal loss also. Okay. But let's calculate the relief if we treat it as a normal loss. See, I want you all to listen to me very carefully. This part is the most important part of this question. Otherwise, this question is very easy. Now, if we treat it as a normal loss, okay, in 25-26, which is the last period of the business, he had a trading loss of 27,000. Okay. Then he has sold the business. Other details are in relation to import. And then there is detail in relation to his job with Verve Limited. But job with Verve Limited was started in May 26. That is tax year 26-27. See, first I have to analyze the data. So in 25-26, there is a loss. There is no other income. Other than that, there are capital gains. Okay. He sold his house on 1st March 26. 1st March 26 is 25-26. On that, he had a capital gain of 125,000. Other than that, he sold his business. On that, there was a gain of 74,000. The business was sold in December 25. Okay. Now let's look at it. Now, in current year, 2025-26, Tariq do not have any total income to offset the trading loss. However, in tax year 2025-26, Tariq can offset the loss. Tariq can offset the loss against his capital gains on disposal of his house and disposal of his business. Okay. Sale of house will normally be exempted from capital gain tax due to private residence relief, as Tariq must have lived in the house. If any portion of the gain will become chargeable, it may be taxed at 18% up till it may be taxed at 24%. As Tariq's basic rate band must have been used against sale of his business, which is eligible for business asset disposal relief. Sir, will you repeat the things again? Yes, I will repeat. Let me complete this paragraph. Let me repeat it. See, in current year, Tariq do not have any income to offset, because in current year there was only a trading loss. Other than the trading loss, what else he had? He had capital gains. But there was a capital gain on sale of house and there was a capital gain on sale of business. Okay. Now let's talk about the sale of house first of all. Sale of house will normally be exempted from capital gain tax due to private residence relief. That's completely logical. When you are selling your house, it gets eligible for private residence relief. Okay. As Tariq must have lived in his house. But for example, if for some period he was not in the house and that portion becomes chargeable, then the rates of capital gain tax are 18% and 24%. Now, I myself wrote 18% first and then I apologized and I wrote 24. Why? Because he sold his business also and he sold his house also. The sale of business must be eligible for business asset disposal relief. The sale of business will be taxed at 14%, but that will consume his basic rate band. Because how much is the gain of sale of business? The gain on sale of business is 74,000 pounds. So obviously that will use the basic rate band. The gain on sale of house will be taxed at later stage. You all know that gain eligible for badder is always taxed first. Okay. So the gain of the house will become subject to 24%. But the point is, that gain must be exempted due to private residence relief. Okay. If the loss is offset against sale of business, it will generate saving at tax rate of 14%. Okay. This will give saving of how much? Sorry, I pasted. This will give saving of how much? The loss is of how much? It's 27,000 pounds. This will give saving of 27,000 pounds into 14%. So how much it will be? Let me calculate it. 27,000 into 14%. This will give saving of 3780. Okay. If the loss is offset against gain of house, if any gain remains chargeable after private residence relief, then it will give saving of 27,000 into 24%. 6480 pounds. See, I don't know that for how much period he lived in the house. I don't know that what will be the private residence relief. But if any gain is chargeable and we offset it against that, then it will give saving at 24%. Let me repeat it again. He can treat this loss as a normal loss offset against current year total income and against the capital gains. Okay. In current year, there is no total income, so he will go for the capital gains. There are two capital gains in the current year. One is sale of house and one is sale of business. Now, while looking at the tax rate, obviously sale of business will be taxed first as it is eligible for business asset disposal relief and it will consume the basic rate back. So sale of house will become subject to tax rate of 24% once the basic rate band is done. Now, if there is any gain remaining chargeable after private residence relief in relation to house and he offsets the loss against that, so that will give saving at 24%. But if there is no gain on sale of house and it is taxed against the sale of business, it will give saving at 14% because the business was eligible for business asset disposal relief and its tax rate was 14%. Okay, I hope that you guys must have understood. If the trading loss is carried back to previous year, I'm looking at possibilities. Explain the reliefs available in respect of the losses in Part A1 and quantify the tax savings. So we are looking at the options. If the trading loss is carried back to previous year, to tax year 2024-25, then it will offset against total income of how much amount? The total income of previous year is 24,950 pounds. Previous year against total income of 24,950 pounds, it will generate saving of. Now use your mind. If my total income is 24,950 pounds and I offset that, I will lose my personal allowance first of all. So my saving will be 24,950 pounds minus 12,570 pounds because my personal allowance will get wasted. Multiplied by 20% is the tax rate in income tax. 24,950 minus 12,570 minus 12,570 into 20%. So that gives us saving of 2476. Remaining loss of how much? My loss was 27,000 pounds. 24,950 pounds have been used. See, your loss is getting used of 24,950 pounds. That remember, because you are offsetting the total income. Yes, you will get saving on after personal allowance amount, but your loss is getting utilized by the entire amount. Okay. So your remaining loss 27,000 minus 24,950. So remaining loss will be 2050 pounds. If it will be offset against gain on sale of house, if any gain is chargeable, then saving will be 2050 pounds into 24%, so that will be saving of 492 pounds. And if it is offset against gain on sale of business, it will give saving of how much? I know you guys must have some queries in your mind, but they will get clear. You just need to listen to the things carefully. It's a 9 marks requirement, so obviously it will be a requirement in which you'll have to do some work. First, we talked about the loss. In 25-26, there was a loss of 27,000 pounds. We can offset it against current year total income. We can offset it against previous 12 months total income. We can also offset it against the capital gain of these periods. But in order to go for the capital gains, we first need to offset the total incomes. So in current year, he didn't have any total income. We can directly go for the capital gains. There were 2 capital gains in the current year. Sale of house. But sale of house is normally exempted due to private residence relief. But for example, if private residence relief is not available for some months or whatever, if it becomes chargeable, it will be taxed at 24%. Because sale of business, which is eligible for business asset disposal relief, that will use the basic rate band. Okay. So if it is offset against sale of business, the saving is 14%. That is the saving. If it is offset against sale of house, this will be the saving. I don't know that what will be the private residence relief, because I haven't been given with the data that for how many months he lived in the home, how many months he was absent and all. We are not given with that data. What I know that he sold his house. Okay. Another option was to carry back against previous 12 months total income. That gave us saving at the rate of 20%. For remaining loss, we told these options: sale of house, sale of business. Okay. Now, another situation. Trading loss of tax year 2025-26 of 27,000 pounds can also be treated as terminal trading loss as it was last period of the business. Okay. And we have already told that terminal loss is 27,000 pounds. In this situation, it will be offset against trading income of current year and then against last 36 months trading income. Okay. Tax relief will be how much? Tax relief will be 0 pounds in current year, as there is no trading income. Okay. In previous accounting period, where trading income is 24,950 pounds, tax saving will be how much? We calculated it ourselves. In the previous accounting period, our trading income is 24,950. Okay. So if we offset it against the previous accounting period trading income, tax saving will be 2,476 pounds. And then remaining trading loss. How much is the remaining trading loss? 27,000 is my trading loss. 24,950 is offset against previous accounting period. You can go back up to 36 months. Okay, you can go back up to 36 months. Tax relief will be 0 pounds in current year, as there is no trading income. Okay, if you want, you can make it in bullets. 0 pounds in current accounting year. Previous accounting period, which is 24-25. Okay, since now you are going back up to 36 months. Current year was 25-26. I am writing the years for your ease. Tax saving will be 2,476, and then remaining trading loss of 2050 pounds if will be relieved in 2023-24. In 23-24, what is our income? It's 62,000 pounds. So we are a higher rate taxpayer. Will be relieved in 23-24, which will give tax saving of how much? Sorry. Let me copy the pound sign again. If in the examination you don't have time, don't waste in putting the pound sign. It will waste your time. If you have time, then it's good. Will be 820 pounds. Total tax saving in terminal trading loss option will be how much? 2476 plus 820 pounds. Sir, will you repeat the things? Yes, I will repeat the things you all know. See, part A1, we have to calculate the loss. No tax savings, just calculate the loss value. So in 25-26, the loss was 27,000 pounds, which was the accounting period of 31st December 25. Terminal loss is loss of last 12 months, the cessation period. 9 months were in our last accounting period. 3 months we had to borrow. But since there was a profit, so we will not borrow. We will keep the terminal loss at 27,000 pounds only, which was the loss of 9 months. Now we had to calculate the reliefs available and the tax savings. So we said that in the tax year 25-26, see, it's a 9 marks requirement. In the tax year 25-26, where there is a loss, we can treat it as a normal loss, offset it against current year total income, then current year gains, or you can go back for previous 12 months total income and then obviously for the gains. Okay, but this range is only 12 months. This range is only 12 months. Then another option is to treat it as a terminal trading loss, current year and then last 36 months trading income only, not the total income, no capital gains. In current year, there was no trading income because we had a loss. In previous year, the trading income was 24,950, which gave us tax saving of 2476. And then remaining trading loss more back to 23-24, which will give us saving at the rate of 40%, saving tax of 820 pounds. So the total saving in this option will be 3296 pounds. Okay. Okay. So now let's move on. We are done with this requirement. Now rest of the question is very easy. You can see small requirements. Now in part B, what he is saying, explain the VAT treatment of the import of goods from Afghanistan. See, for the VAT purpose, we have already studied in the course. Let me repeat it again. Whenever you import the goods, you have to pay VAT on them because obviously tax department wants to discourage imports. But if you are a VAT registered business and you are dealing in taxable supplies, then at whatever VAT you have paid, you can claim the refund, or in other words, you can claim input tax of the VAT which you have paid. So the output tax obligation and the input tax recovery can be offset. Okay, let's draft it. It's a 2 marks requirement, very easy one. So this is our next requirement. Explain the VAT treatment of the import of goods. So you can go and refer it here. In the 9 months ending 31st December 25, Tariq imported some goods from the country of Afghanistan. Okay, so since it was import of goods for the business. On import of goods, Tariq will have to account for output tax obligation of VAT as he has imported goods to UK. However, this VAT obligation can be adjusted against input tax claim if these goods will be used for taxable supplies, okay, this mechanism is referred as reverse charge mechanism. Okay, if you don't remember the things, you can simply go to value added taxes. Okay, in the value added taxes, we study this mechanism for import of goods. Whenever you do an import transaction, you have to pay the VAT, but whatever VAT you have paid, you can recover it if you are registered for VAT and you are using it for taxable supply purpose. So it was a very brief, how many marks requirement? Just 2 marks. So when you import the goods, you pay VAT on them. Okay, you account for an output tax obligation, you record a VAT payable because you are importing goods. Tax department wants to discourage them. But if you are VAT registered business and you are using those goods as a raw material for taxable supplies, for making standard rated or zero rated items, so then whatever output tax you have booked, you can record an input VAT or a recovery from the tax department. Both of them will offset. This is called reverse charge mechanism. But if you are not using it for your business, if you are not using it for taxable supplies, then you won't be able to recover the VAT. In that case, it will become your cost. Okay. Then comes part C. Very easy one. State the VAT implications of the cessation of the business and the sale of business assets. How many marks? 4 marks. What are the VAT obligations for cessation of the business? So whenever you cease your business, you have to deregister for VAT. That's compulsory VAT deregistration. Okay. Now, Tariq is seizing his business. Tariq is seizing his business on what date? He is seizing his business on 31st of December 2025. Now, if you remember your VAT topic, deregistration of VAT, compulsory deregistration, I would say. If you go down, compulsory deregistration when a business has ceased to make the taxable supplies. So when you cease, when you end to make the taxable supplies, you have to deregister from VAT within 30 days. Now, when you deregister for VAT, what is the treatment? All the items which are present, all the goods, and those goods are standard rated items on which you recovered the VAT, you have to pay VAT on them on their market value, and you have to treat them as sold on their market value. Okay, but if this VAT payable is less than £1,000, then it is waived off. Okay, so what is the question? If you go and look at it, state VAT implications of the cessation of the business. Okay, Tariq will have to compulsorily deregister his business from VAT as he will cease to make taxable supplies on cessation of business. This deregistration has to be done within 30 days of cessation. Okay, this date will be 31st of January 2026 as Tariq will cease his business on 31st December 2025. Okay, Tariq is ceasing his business on 31st December 25, so he has to deregister himself within 30 days. Okay, on deregistration, Tariq will have to account for VAT on taxable supplies held in the business according to their market value. Okay, VAT will be payable on them at VAT rate of 20% according to their market value, and they will be treated as deemed sold. Even though if they are not actually sold, we have to assume them as sold, and on their market value we have to pay VAT, and the rate of VAT is 20%. However, if this VAT payable is less than £1,000, let me copy the pound sign again. copy. Some students ask that, sir, how do you copy and paste? We copy, and for paste we press Control V. Is less than 1,000 pounds, then it will get waived. Done. So now if you look at it, these parts are like easy cash marks. Okay. Then comes the last part D, 2 marks requirement. Explain the income tax implications for Tariq of the relocation payment. 2 marks. Very easy. Basically, the examiner is balancing, because the part B 9 marks requirement was a bit difficult. So now he is giving the easy ones to us. Now the relocation payment was how much? If you go and look at it, the relocation payment was 34,500 pounds. From this, 21,000 pounds was given to compensate Tariq because he sold his house at a lower price. Now this will be completely chargeable. There is no exemption for it. Okay. 21,000 pounds. Sorry. Let me copy the pound sign again. Where is the pound sign? Yeah. 21,000 pounds paid to Tariq as a compensation for selling his house cheaper will be wholly taxable for Tariq. Okay. There is no exemption for amount paid by employer against selling house at a lower price. This 21,000 will be completely chargeable. 13,500 pounds paid by Verve Limited to Tariq for compensation against his relocation cost will be an exempt benefit up to 8,000 pounds. Excess 5,500 pounds will be taxable as an employment benefit on Tariq. Okay. So 21,000 pounds paid to Tariq as a compensation for selling his house cheaper will be wholly taxable for Tariq as an employment benefit. Okay. There is no exemption for that. But 13,500 pounds which were paid to Tariq for relocation cost compensation, yes, that will be an exempt benefit up to 8,000 pounds. So if you look at this question, I believe only one part B, part A2, what I say, was a bit one in which you had to do some working. Rest other were like very easy ones. If you look at them, part A1, you need to talk about that. What is the loss amount and the terminal loss working? Then yes, this relief working was a bit interesting. Here you had to do some analysis. But then VAT on import, VAT on cessation of the business, and then treatment for relocation payments. This 21,000 will be wholly chargeable. There is no exemption for this. But for this 13,500, yes, Tariq will get exemption up to 8,000. So with this, our discussion on this official mock exam issued by ACCA for June 26 attempt is done. I must say that it's doable, and it's about practicing more and more complete exam papers. That's the most important thing. And that is the thing which creates a difference between like a student who may fail and a student who passes and even scores good. Because the more you practice complete exam papers, and it increases your chances to pass the exam. So if you have any queries, you all have my direct WhatsApp number. You can always contact me if you have any query. Okay, I'm always available. You can contact me. You can ask your queries. Okay, and then continue watching the past paper discussion series in which we are looking at 7 complete attempt papers and then the mocks. Okay, so best of luck for your exams. Thank you, everyone.